бид нар 2 дугаар хэсгээ нэрье. Сая одоо хилцүүлгийн хэсэгт идэвхтэй оролцсон та бүхэндээ талархаж байгаагаа илэрхийлье. За тэгээ одоо бол яагаад одоо энэ нээлттэй байдал хөрөнгө оруулагчдын хувьд чухал байд юм бэ гэдэг сэдвээр ноён Koppa илтгэл тавих байгаа. За Koppa таныг энэ дээр үлье.
Thank you very much. It's a pleasure to be here to participate in this well-attended 8th Forum on Corporate Governance. I'm very happy to be here on behalf of TDB to share my perspectives on the experience that TDB has in particular, and obviously some of the driving forces behind it. I would have to remark that from what I've gathered from listening to the presentations and the discussion, very much of the issue of disclosure, which I understand there's not a real, from Basra, there's not really a single word Mongolian term for that. It means providing information to the public, I guess is the translation that would be used. But that's really appropriate because so much what I heard this morning seemed to revolve about getting information out to you, most of you who had some way been shareholders in the companies that were privatized through listings on the stock exchange many years ago. And the problems of getting information, obviously, therefore understanding the financials, getting dividends and all that. And much of the focus I'm still hearing is how to improve that reporting and the requirements now on the Mongolian Stock Exchange. But when I listen and look, that in terms of the stock exchange, realistically, not much new money has been really raised from investors. Not many companies have done a secondary offering. So we haven't really seen this vehicle do what is really its intent, which is to help generate funds for new investment and expanding companies by listing them. If I've got this right, I should go to the next test. So I think we have to understand it, though, in a broader context. Here in Mongolia, the growth of the country depends on companies primarily in the private sector, and as we spoke earlier, the plans to privatize and structure the holdings of Erdness, Mongol, and the other state-owned companies through listings on the stock exchange represent an attempt to get funding from outside of Mongolia. Mongolia has been growing, and although it's slowed, it will continue to grow and require for the foreseeable future funding from outside of Mongolia. And so my focus is to help us understand what investors are looking for and why they need disclosure and what kinds they need. Because if we look at the financing options that are available to companies anywhere, and in particular in Mongolia, you go first to the local bank. And of course the local bank in any country has usually good knowledge on the companies, the people. It doesn't often have to rely so much on financial disclosure. Local accounting systems and auditing and the like in countries that are going through entrance into market economies and the like generally have fairly unreliable reporting, financial reporting, and that's true even in more developed countries. I mean, very often the books are kept for tax purposes, to minimize the amount of tax, but therefore earnings are understated, assets are undervalued, and things like that. When I was a baby banker and my first assignment abroad was in Singapore, when it was an emerging market. I was introduced to a desk and I was given a number of accounts to handle of local companies, Singaporean companies. And I was told that there's one drawer of the desk that is always kept locked, and you have the key to it, and that's where you keep all the separate files of financial information on each of the clients that were different from what were shown on their financial statements. Obviously, that worked in a local environment, and back when Singapore itself was a fairly underdeveloped market. But as companies grow, even domestic banks need to have better financial information and disclosure. Things just get too big. And then, so the first step a local borrower needs, or a local company wants from a bank, and I'm speaking from the point of view of a banker, but also from any company, is you need to have financial information that gets more and more rigorous and more disclosure. As the company grows, it takes on new lines of business. It has subsidiary companies. How are the relations between these? What are the financing flows? So there's always a movement, even for domestic banks, to start requiring better audited financial information, and that brings in the local market, the international auditing firms. But particularly when a company grows and maybe it is looking to expanded financing, it goes to international banks. And from the point of view of TDB has been working with many banks, and I'll give you some details later, over a number of years to get access to funds. So we ourselves become the borrower from international banks. And what do international banks want? They need a lot of financial information. They want audited numbers and more disclosure. Then as you move up the chain and you decide you want to go to the debt markets, unfortunately there really isn't a debt market in Mongolia, but if you go to the international debt markets, you have to, you have to provide certain, meet certain requirements of financial and other information, which I'll detail later. And finally, you want to go public. If you want to list in Mongolia, we've talked about that. We've also heard about the requirements for listing in Singapore and Hong Kong and the like. And there are a number of course, requirements that were mentioned. But what do all these financing options and the sourcing of funds have in common? Really, all the companies that are playing in this game have fiduciary responsibility. In other words, they're managing other people's money. Whether that be a commercial bank, we have requirements to protect the funds from our depositors, from banks that lend to us, from investors that have bought our bonds, and obviously for the shareholders. If you go into the debt markets, your primary source of funds would be asset managers, from asset managers who are managing pension funds and life insurance funds, which, in other words, individuals' savings and monies for their old age. And then you get into the active investors from hedge funds or equity funds, which often have, obviously, they're managing other people's money, who all want to have profits and returns. So this is where they're coming from. And therefore, we have a heavily regulated environment. We have, of course, banking supervision on the banks. Then if we go to want to go to the debt or equity markets, we have securities laws. In the debt markets internationally, we have to we refer to something called Reg S or 144A, which I will talk about. You have to interact with the FRC here, or the Mongolian Stock Exchange, or the Bank of Mongolia. In the case of a bank abroad, it's the SEC, the FSA, or the JPXR, depending on which exchange. And now you have a new requirement that seems to apply globally called FATCA. No, that is not misspelled fat cat. It's the the Foreign Accounts Tax Compliance Act that gets into play. So there are others, other regulators and other institutions, all aimed at protecting investors against, well, against what? Fraud. If you go back, many of these laws date from the 1930s. In 1933 and 1934, when the United States of America was trying to recover from a Great Depression, a lot of it was caused by a bubble in the stock market where investors were lured in to invest, and then you had the proverbial white-haired, blue-haired widow from Omaha who was naive, untrained, vulnerable. She was managing the wealth of her husband left to her, and was obviously a target for all kinds of tricks. And so this is the epitome of the widows and orphans and the unsophisticated investor who needs to be protected. There's also the issue of tax evasion. I just mentioned FATCA. So the investors have to make sure that they are in compliance and not having their funds going into investing in a company that is potentially engaged in tax evasion. We're not talking about tax avoidance or managing to minimize your taxes through all kinds of loopholes. I'm talking about pure tax evasion. And of course, we know that the tax man is not everybody's favorite, because as Mark Twain, an old American author and humorist, said, the only difference between a tax man and a taxidermist is that the taxidermist leaves the skin. Then you have money laundering. And of course the ski mask also characterizes terrorists. So we have all kinds of new regulations to prevent aiding and abetting criminal activity, terrorist activity. Then there are certain countries or activities which are sanctioned. So all of this is a concern to investors because they cannot be commingling the funds from the blue-haired lady from Omaha into these to companies that are engaged in any of these activities. And how is this all managed to make sure? Well, it's through disclosure, to make sure that that the companies raising the money, whether on the debt markets or the equity markets, or even through large bank loans on the international banking market, are in compliance with all the reporting and operating activities that would keep them from violating any kinds of regulations as it relates to tax or criminal activities and the like. Disclosure is usually done through a use of experts, such as auditing firms, underwriters, which tend to be international investment banks, legal firms, both domestic and international, and rating agencies on debt, which give a view as to the quality of the asset. And all of these must meet standards of expertise, ethics, and professional responsibility. They all take certain risks in what they're doing as it relates to this. In fact, we have the international Big Four in terms of auditing firms. There was a Big Five a little over 10 years ago, but one of those firms ceased to exist because it had not exercised due care in its audit work on a large American company. So what do we have to disclose? Well, we have to disclose financial information, of course. But then, as was mentioned early in the day, it goes beyond that. We have to provide information on our company's history, strategy, operational activities, performance. In the case of a bank, but not only a bank, you have to talk about how you manage your risks and how you are in compliance with a number of key regulations and operating norms. Audited financial statements are the key to the financial information, particularly if you're looking to go into the international markets, to any of into the public markets. The equity markets require a minimum of 2 years audited financial statements by a qualified accounting firm, which generally tends to be in many jurisdictions a Big Four firm, and they want that firm to provide an unqualified audit opinion. They don't want it to say, well, we're not so sure this company could be a going concern. They want to make sure that it's, in their opinion, that the results of the financial statements present fairly the company's position. Then in the case of a debt issuance and even an equity offering, you have to prepare an offering memorandum or a prospectus. This is a disclosure document prepared by the issuer. In the case of TDB, we have to help prepare this. We get guidance from the banks we use as our underwriters, from accountants, the auditing firm we use, and international lawyers and domestic lawyers. The preparation of this document is, this is a typo, but it should say through a process, but it is a thorough process of due diligence undertaken by the underwriters and the lawyers. This goes on for days and weeks, literally, the preparation of this document, drafts, redrafts, additional information required, interviews, meetings, telephone calls, etc., etc. That's not to mention approximately 1 month that the auditors spend with you going through the annual report, annual figures, or some interim figures. Our experience, I'll comment upon. Our recent activity was the issuance of a $500 million 5-year senior note, which we issued under the U.S. Securities Act, Rule 144A and Regulation S. Under Regulation 144A, and this goes back to the Securities Act, Acts of 1933 and 34, what we have is actually a private placement into the U.S. And in order to issue your securities as a foreign company into the United States, you must meet fairly rigorous disclosure requirements. But mechanically, what happens is, in the U.S., certain investors, these are largely investment funds which are managing pension money, large companies such as Fidelity and others, which are managing billions and billions of dollars. You have to understand there is $70 trillion worth of money in the world being managed by professional fund managers that is always seeking a home to invest. So you present to these companies, and they want to buy. Mechanically, the underwriting banks buy the securities and then immediately resell them to these institutional investors. They have to be qualified as qualified institutional buyers. The bonds are not sold to the retail trade, so directly none of my blue-haired ladies from Omaha are going to be able to buy these bonds right out of the box. And then we also issue under Reg S, which covers the issuance of securities by a foreign company outside of the United States. So we go to both markets, both the U.S. and the Singapore, Hong Kong, London markets. And we have the stocks traded on the Singapore Stock Exchange, so we must meet the requirements for listing in Singapore. And the disclosure under 144A and Reg S requires a lot of disclosure. Our offering memorandum for this transaction was 579 pages. It was a real doorstopper. Most of the investors didn't want to have a copy of it. They preferred to read it on the soft copy on their internet. About one third of the disclosure was the detailed financial information prepared together with our accounting auditing firm, and the rest was, besides details of how the notes work, there was a lot of information, in this case because we had the involvement of the Ministry of Finance and the Bank of Mongolia under a swap and a guarantee arrangement. There was over 100 pages of disclosure on Mongolia. There were interviews with all the ministries. There were related questionnaires that had to be completed and a lot of data checked and double-checked. But we also had about 200 pages of information on TDB, all our historical, our policies, our strategies, our risk management and other corporate governments all had to be fully disclosed, and there were continuous questions coming back from the lawyers to make sure that it was correct in all material respects, because the international lawyer we use has to issue a 10b-5 letter, it's called, which states essentially that nothing has come to his attention that would indicate the information given in the offering memorandum is not complete and accurate in all material respects. They're putting their firm's name and reputation on the line by issuing that statement. Further, the auditors, who have also issued an opinion on our annual report or our interim figures, they also have to issue a comfort letter that essentially states that the firm has audited and reviewed our most recent financial statements and that nothing has come to their attention since then that would indicate the financial condition has materially changed. In fact, through each stage of the process, as we start going into the marketing of the bond, there is a follow-up due diligence call before the next step where we are, and including a question from the auditors that has anything changed since the last week or the last 3 days in any of the major asset categories or liabilities of the bank. And the lawyers also call and they say, has anything changed in your strategies, your activities, any new developments that you haven't told us about? So there's a continuous process to make sure that the information is up to date and accurate. And then, of course, we have to have debt ratings. We use 2 rating agencies, Moody's and S&P, and they go through another process of requiring information. So that is the process. We started issuing debt in the capital markets in 2007 with a small issue of $75 million. We've repaid that. We issued a few years later $150 million. Both were Reg S transactions, which were not marketed into the United States, but they still had significant disclosure requirements. We issued subordinated debt, $25 million, off of this program to investors. Subordinated debt is a form of capital. It's not quite equity, but it's long-term debt subordinated to all other obligations. We paid the 150. We issued 300 million. Also Reg S in 2012, which we just repaid in September. We went to the market and we did a dim sum bond, so-called. It's offshore renminbi through Hong Kong, 700 million renminbi in 2014. We also had a syndicated loan from a group of banks led with FMO, a Dutch development bank, and ING in 2013, $82 million. And most recently I mentioned the $500 million US dollar transaction. So we've gone to the market several times, repaid on time, and we have had over 1.25 billion raised through these methods, in addition to what we do by other means. So this consistent approach has required us to develop a relationship with our investors. We provide them regular financial information. We meet them regularly. So the disclosure process continues. In addition, we have bank relations. We maintain current 15 currencies in various bank accounts abroad to help settle payments for our clients. We work with more than 150 banks. We have over $500 million of trade finance lines, which include about $200 to $300 million worth of funding that we can take from these banks, from about 45 financial institutions. The logos of several are indicated here. And as I mentioned, we issued, we had a syndicated loan, and we've also done some syndicated outplacement, in other words, getting funds from the foreign banks. to help us with directly with some of our loans, which they share the risk on. So with all of this, the investors on our bonds, which for the last issue was about, we spoke 6 days traveling around the world, 36 meetings involving 80 investors face-to-face, plus others who were on, reading the prospectus online, etc. So we had over 90 investors come in. All of these require financial and operational updates. The banks who lend us, these 45 banks, including the IFC and the ADB, who provide guarantees on some of our trade finance transactions, they have exhaustive compliance and disclosure requirements. We're getting visits every week from someone who says, oh, we have to update our ATM, know your customer, our compliance department wants to know this. Banks themselves are under a lot of pressure. We recently, a couple of years ago, had one of the banks say, which had problems with dealings in some countries leading to having to pay large fines for alleged money laundering cooperation. This bank said, we no longer find it profitable to maintain banking relations, for providing banking services to banks in Mongolia. So because of all our compliance requirements, so kindly please use another bank. So banks are under pressure all around the world to make sure that whom they're doing business with is also compliant with everything. So it's a compliance world, and compliance means disclosure. So in a nutshell, if you want to get money from outside of Mongolia, not to mention the difficulty you might have within Mongolia, you have a lot of disclosure. But it is worth it if you want to grow. Recently, the total funds that TDB had raised from the international markets, both bilateral arrangements with banks and our international bonds and other funding, comprised almost half of the funds that we had to use to put into the market. So it's been an important source. So as you and others who are in the are looking to the future on how we handle compliance and reporting and disclosure in Mongolia, we have to keep an eye on what the world will require, because we're going to have to continue to access funds from the institutional markets, both debt and equity. That's our experience, and that's why investors require disclosure. Thank you very much.